Um, so today we are going to be teaching on the trading strategy, and this we are going to be focusing on concept from Ario. So we have to give credit to Ario. Okay. So what we are going to be focusing on this trading strategy, we are going to be focusing on concepts from Ario, and the first concept we are going to be looking at is PDRA, which is we have fair value gaps, swing points, and then fair value areas. Then a second concept will be two candle rejection, that is 2CR, which is two candle rejection from Ario. And then the third one, we are going to be looking at other flow lags. But we are also going to be looking at other things from Ario. So, but these are the main things we are going to be focusing on right now. These are the main things that we are going to be focusing on right now. So, but before that, we are going to state, we are going to we are going to go into some laws, and remember we are giving credit to Ariel because the concepts are not mine, and it's Ariel's concept from which he made some some concept from ICT, which he used to create his own concept, and that is what we are learning from. Okay, I'm having a little cough, so bear with me. Okay, so the first thing I'm going to be looking at is the law of price. Actually, from Ariel's concept, there's nothing like law of, there's nothing like law of price, but I had to like state some of the laws that we use, and I called some of the law, the first law, the second law, and then the third law of price. Um, Actually, if you are watching directly from Ariel, there is no law of price like this. I just put it together so that to make you understand and make things easier. So the first law states that price moves from one PDRA to a higher time frame PDRA. Okay, I've not yet taught you people what PDRA is, but in my next slide, I'm going to teach you what PDRA is. So the second law of price states that if price is not offering fair value, it's seeking liquidity. If price is not offering fair value, it's seeking liquidity. We are going to cover what fair value is and also order flow so you will understand it properly. And then the third law, we have which said that price can sink into a PDRA only once. Okay, so if we have something like a fair value gap or fair value area, any PDRA at all, majorly the PDRA that we use, and if price things into those PDRA, we only price can uh, price is only valid once when it sticks into a PDRA. We are going to explain that to you, but as we are going in this course right now. So remember again, I'm giving credit to Ariel. These concepts are not my concepts; they're from Ariel, but I'm teaching some things that I understand. Okay, so now PDRA. So PDarray means the premium and discount array. They are what we can continue higher or lower from, and they are what we can target. Okay. So remember we said that we are using three PDRs in this tutorial. Just three PDRs, which are fair value areas, fair value gaps, and swing points. So premium and discount array um, uh, uh, let me say like something that we can continue higher or lower from, and also we can target. Okay, like a drawn liquidity. Like if you already know what drawn liquidity is good for you, if you don't know, keep following. We will explain everything to you. Like drawn liquidity is just what where price is going to next. That should be easy, I guess. So now let's start first on fair value gap. So fair value gap shows an imbalance in price And a fair value gap is formed with three candles. Okay, we have the initial candle, which is the first candle. Okay, let me expand this so that you can see. I just screenshot this so that I will use. So we have the first candle. This is the first candle. I call it the initial candle, or you can call it anything, but this is the first candle. And then we have the expansion. The next candle must be an expansion candle. Okay, so that we will have this gap right here. And then the third candle can be uh, in MMT, which from Ario, we call it the tricky third candle because we don't know whether it's going to be an expansion or a consolidation like this or a rejection. But that's not what we are focusing on right now. What we are focusing on is spotting the fair value gap. So now in the fair value gap, you have to have the first candle, the second candle, and expansion, and then we have to have a third candle. And the candle must not close. Mm, it must not close the initial. What I'm doing. It must not close the initial candle high or low, whatsoever it is, bullish or bearish. It must not like this week, must not weak to here like this and cover it. Okay, there must be a gap. Okay, that's why it's fair value gap. Must be a gap like this, like you are seeing here. There must be a gap like this. Okay, so now you can go to your chart and spot all the fair value gaps that you have seen for clarity purpose. Just spot anything that looks like that, and then that's your fair value gap. Okay, let me keep that one right there. The next thing we are going to be looking at is swing point. Bring this right here. Here. Okay, let me do like this. It's swing point. So swing point is also a three candle formation where the middle candle sticks out. Okay, the middle candle sticks out. So you just have almost the same thing like a fair value gap, but this one there's no gap. So what you have here is you have the first candle, which is this candle right here. Okay, first candle, second candle, and then the third candle. Now this candle here sticks out. The middle candle is what we are focusing on. Okay, even this other one too, you can also see we have the first candle and then the second candle and then the third candle. This middle candle, if it sticks out, then you have a a, a a swing point. Okay, even this one right here, we have the first, the second, and then the third. This one here is your swing point. This is also a swing point. Uh, this is also a swing point right here. Okay, this is also a swing point, and this is also a swing point right here. Okay, magnet, that's also a swing point. I don't know why it's clearing, but that's also a swing point. So remember, we have three candle formation, three candle movement. We have the first candle, the second candle, and the third candle. Now that candle that sticks out, okay, it's it's your swing point. The same thing with this one. One, two, three. This candle is a swing point. Okay, now one, two, three. Here, there's no swing point right here. There's no swing point right here. Okay, because this is one, two, and three. This one doesn't stick out. Okay, so there's no swing point here, but one, two, three. This is where you have a swing point. This high right here, and then for this low, we have one, two, three. This one sticks out. Okay, there's nothing covering at the left or the right, so it sticks out. So that's your swing point. Okay, so I'm going to delete that, delete this, delete this, delete this, and then we minimize. So now we have actually covered the second PDRA. You can go to your chart and mark out all this PDRA to help you understand. So now fair value area. Fair value area is a bit more tricky, like an advanced something. And fair value area, all of them are three swing movement. Okay, in ICT, in fair value areas in ICT, it's seen as other blocks. I know you have heard of other blocks, mitigation block or breaker block, but at least you have heard of other block. So Ario, the owner of the concept that we use, summed it up to one uh one concept, which is the fair value area. So instead of you focusing on too many things like the other block, multiplication block and the breakout block, we just focus on one thing because it's simply the same thing. Okay, so that we won't focus on many things. So from my chart, this is what I screenshot to use to show you what it looks like. So this is a bullish fair value area. Okay, and if you look at the law that I stated, uh, the second law states that um second law, if price is not offering fair value, it's seeking liquidity. I'm going to cover that later. So now if you check this, you can see here we have one, okay, we have two, and then we have three. Okay, we have three, then it goes up to take out that high. It was a three swing point movement. Okay, and you can see clearly how price came in, back down, and tap into a fair value area to go higher. Okay, so this fair value area now is a PDarray where price can continue higher from. Okay, this is a bullish fair value area, so we are expecting price to continue higher from. Well, it doesn't mean that it can't fail, but if it fails, it's also useful in this concept that we are using. Okay, if the fair value area fails right here, remember that second law that I said that if price is not offering fair value, is seeking liquidity. Okay, so let me clean this and explain one more thing. Sorry about that. Now, now, if now, now, what is offering fair value? Let's do this now. We had enough in here. What happened here is that we have buyers. Okay, so seller didn't get an opportunity to 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 um, to get into to also participate in the market. So that's that's when there is no fair value. There's no fair value actually. Now from here to here is where there's no fair value. So market price has to come back lower here to offer fair value. That's to give the seller a chance to get involved in the market. Okay, to give the seller a chance to get involved in the market. So from here to here, okay, okay, from here to here is where we it's so from here to here is where we did not offer fair value. Okay, so price has to come back down. Price has to come back down. Okay, to offer fair value. Okay, if it comes back down, then after offering fair value, it keeps going down. Then we know for sure that we are definitely seeking liquidity, and this is the swing point. Our swing point is our where we call liquidity, where liquidity lies. This is our swing point right here. Okay, let me mark it out properly. There are too many things on this. What did I just cleared it off. Okay. uh okay, so let's go to a more descriptive. Let's use this to explain further. Now this is what the bullish fair value area is. And now note that there is no fair value area without a fair value gap. There must be a fair value gap before you have a fair value area. Okay, let's bring that image back to show you. Okay, so this is the image. I said that there is no fair value area without a fair value gap. That means if there's no fair value gap, there's no fair value area, because the most important thing right there is the fair value gap. So we have this. No, sorry. So we have this little fair value gap right here. You see, we have this fair value gap right here. Is a fair value gap. Okay, so if there's no fair value gap, there is no fair value area. So let's continue lower. Now This is what a bullish fair value area looks like. This is what a bullish fair value area look like. Now we had buyers in the market, and we had buyers in the market. We did not have sellers in the market. So this is the area where there was no fair value. Okay, this is the area where there was no fair value. Let me use this box to show you to highlight. Now from here to here is where there was no fair value. Okay, so if market wants to be efficient, it has to come back down here. Okay, to offer fair value area, then it continues. That means what I'm trying to say that if its intention was to offer fair value, it will sting into this fair value area, then continue. Okay, it won't disrespect this fair value area. But if it disrespects this fair value area, that means intention was to do what? Seek liquidity. And the liquidity is at this low right here. Okay, I'll teach you about order flow lag and it will help you understand better. I mean, it was seeking liquidity at the lower point. So, if to say we are trading and then we see that the fair value area has been disrespected, okay, if we see that the fair value area, this fair value area is disrespected, now we know that our bias is to this low. So, we can look for trade to target this low. And this is what a bearish fair value area looks like. So, it's just the same thing. So this was the area where there was no fair value. Okay, this was the area where there was no fair value. Okay, so if the market is gonna be efficient, what will it do? It will come back here to offer fair value, then go back down. Okay, now okay, this is the slide of what I was trying to tell you, that it's going to offer fair value. What I say here, this is when it's offering fair value to continue higher, and this is bullish order. This is a bullish fair value area, and this is a bearish fair value area. Here it offers fair value to continue lower, and that is the same thing we saw in the image above here. Okay, exact same thing, the exact same thing that we saw right here. Okay, you see what price did there. Okay, price came here, went up, and what, this is the area where there was no fair value. So for the market to be efficient, it came back down to offer fair value. It staying into it, wants to continue higher. Okay, let's reduce it, and let's go to the last slide. This last slide is where we apply the, I've already taught you this, but let me just say it again. Okay, now what this image means is that, okay, this is your fair value area. Okay, when price comes lower and disrespect this fair value area, what is it doing? It means that it's not offering fair value, that is seeking liquidity at these lows. And what is liquidity? Your swing point. Okay, your swing point. So we have been able to cover fair value area, fair value gaps, and swing point. Okay, now marking out your fair value area is quite tricky, and I think maybe in another video I'll explain how to mark out your fair value area. And not necessarily in this video. In the next video, I'll do another video and tell you how to mark out a fair value area. But I think I could rush into something right there. But okay, let it be in the next video.